Welcome to Investing with Danelle. I invest small amounts of money over a minimum 10-year horizon using an investment portfolio I started in 2022 with approximately $5,000. Please be sure to like, subscribe, and share. Click the all notification bell. This year I'm studying stock sectors. Remember, this is not an endorsement of Edward Jones. I will be using their stock study sheets from December the 2nd, 2024. We are now in April, and the sector is energy. This is the Edward Jones stock study sheet for December the 2nd, 2024. Let's look at the companies that are on here. BP, I see Chevron.Exxon Mobil, Marathon Petroleum, Phillips 66, Shell. What will I be studying? Chevron symbol CVX, ExxonMobil symbol XOM, Occidental Petroleum symbol OXY. Here's one of my recent community posts. Happy Saturday. Buy low, sell high. It isn't a loss until you finalize a sale. Stay the course, keep calm, and dollar cost average. There's a picture of the co-working space I use. So everyone, the stock market has been on a bit of a journey. I have some different balances for the month of April. There has been a drop in the balance value. With that, it was going up and down. That was on the 9th. Let's look on the 8th. It was $10,228. When you look at the year to date, when the balance was at $10,228, you can see how it was as high as almost $12,200. And when you're looking at year to date, you can see that it went down, then it went up a bit. So you can see this steady fall. The first stock in the energy sector is Chevron. The PE ratio is 16.991. I normally like stocks that have a PE ratio below 20. That means it has a low amount of debt. The current analyst rating is 8.1, which means the investors are bullish on Chevron. They personally think it's a buy. I'm looking at the chart that goes back to 1975 up to 2025. To be honest, I do see a bit of a dip. With that said, I personally wouldn't consider this something that is a buying opportunity right now, although I do own some. So the main reason that I would purchase this at this point would be that I understand the company. So dollar-wise, price-wise, it's not a purchasing opportunity, but it could be because this is a company I understand. If I stuck to what Warren Buffett says, which is to buy stocks you understand. Moving on to ExxonMobil, it has a PE ratio of 14.77. Again, that's a great PE ratio, low debt. The analyst rating is 2.4, which is considered bearish, and so the investors aren't necessarily considering this a good stock purchase. Let's look at the stock charts. We see going back to 1975. Let me just look at these charts. Okay, no. Let's look at the chart for ExxonMobil, symbol XOM. going back to 1975, we did see a dip. It looks like it's around 2020. That would have made sense. We had the public health event. Up to right now, it is looking like back in March, it was 115. But if I were to look at this price, I wouldn't say that it's a buying opportunity. With that said, I understand the company. So if I was wanting to buy an energy company that I understand, both ExxonMobil and Chevron, in my opinion, would be good potential purchases. The crude output in Guyana, oil production in the South American country, is controlled by a consortium led by ExxonMobil. Occidental Petroleum, the PE ratio is 21.79. It's slightly above 20. The analysts say it is bearish. I mean, that's what the analysts say. Let's look at the chart. Is there a chart? Here we go. There's a lot of other things here. I already said the PE ratio, and here's the 52-week low and high. It is on the low end of the 52-week low and high. You can see that it's bearish, 1.7 out of 10. But let's look at the chart. Going back to 1975 until now, the price is down. Honestly, I like Occidental Petroleum. I understand the company. And the price is good, which to me, this would be a buying opportunity. You have both things, understanding the company and buying opportunity. I am familiar with the stock because our investment club purchased it and it made quite a bit of money. And we actually ended up selling the equivalent of the cost basis, which is the amount invested. And we did pretty much what we have in the investment club is from the profit. So yeah, I mean, to me, this is a good buying opportunity. You can't just go buy that 1.7. I understand the price of this. It says right here, here's how much you would have made owning Occidental Petroleum stock in the past 5 years. Occidental Petroleum has outperformed the market over the past 5 years by 13% on an annualized basis, producing an annual return of 29.63%. Buying $100 in OXY, Occidental Petroleum, it would be worth $378. So there you go. And it says Occidental Petroleum sells BP Basin mineral position to Elk Range Royalties. And it says right here they closed a sale of its mineral royalties spanning 250,000 acres in the Denver Basin in Colorado. They sold it for $905 million. The company plans to use proceeds from these assets to lower its debt, which has increased following the purchase of Crown Rock last August. In terms of the stock study list, all three of these companies, Chevron, ExxonMobil, and Occidental Petroleum, are in my Investing with Danelle investment portfolio. If you don't particularly want to be dealing with individual stocks, here is an energy mutual fund. And actually, this is an ETF. Fidelity MSCI Energy Index ETF, symbol FENI. You can see the chart here. I mean, is it a buying opportunity? The price is up. But if you were interested in owning energy, well, this might be good for you. The top 10 holdings, there's a total of 107 holdings, and the stocks that are in the top 10 represent 63.66% of the portfolio. I see Exxon, I see Chevron. Let's see some other ones. ConocoPhillips. Now the one that I don't see, I see Marathon. Oh, wait a minute, it's in there. It's just not in the top 10. So I was able to find Occidental Petroleum in the holdings. Now these returns definitely give me pause. 1 year is 6.62, 3 year 20%, 5 year 12%, and then the life of the fund is 3%, and 10 years 4%. If I were to go buy those returns, it would be a no thank you. It would be a 0 out of 10, do not recommend. But again, I'm not a fiduciary. The returns could change. It just really depends on what's going on with the stock market. Let's look at the expense ratio, which is 0.08. That's not as good as Fidelity 500 index symbol FXAIX. The expense ratio is 0.02, very low expense ratio. And here is the returns. 1 year is 25%, 3 year 8%, 10 year is 13%, and the lifetime of the fund is 11.03%. To me, this would be better if you wanted to get some exposure to some degree. And then here goes the portfolio holdings of the Fidelity 500 index fund. And we see that they have Occidental Petroleum, they have Chevron. There you go. Oh, they have ExxonMobil. They have all three energy companies: ExxonMobil, Occidental Petroleum, and Chevron. And here's some more about Fidelity 500 Index Fund. I currently have some holdings. I do have Fidelity 500 Index Fund in the portfolio. Is valued at around $250, and it represents 2.37% of the portfolio. All right, everyone, I'm going to look at the 52-week range for Fidelity 500 Index Fund. When you look at it, it is at the low end of the 52-week low and high. The average cost of the Fidelity 500 Index is $164.08. So what that means is previously the price was down. The price is up a bit. For Fidelity 500 Index, based on my portfolio, a gain of $17 and a total gain loss of 7.37. Remember, this is investing small amounts of money. We're not doing huge investments. Here are some purchases, dividends, reinvestment income, and contributions. We did have reinvestment of Fidelity 500 Index. It's less than $1, but a win is a win to me. Reinvestment of NVIDIA, whatever you want to call it, less than $1. Reinvestment of NVIDIA is an AI stock, everyone. Simon Property, that is a real estate investment trust, less than $1 reinvestment. And we have Prologis, which is also a real estate investment trust, around $1, close to $1 reinvestment. And for MSCI, small reinvestment. So what I will say is, what I want you to pay attention to is even though these reinvestment amounts are less than $1, currently, because the stock market is down, it's purchasing more stock. Remember, dividend reinvestment is a way to take advantage of dollar cost averaging. When the stock market is down, I'm able to buy stocks, ETFs, and mutual funds at a discounted rate. And with that, the April 2025 investment portfolio is complete. Go to the About section of my YouTube channel to learn more about where I am on social media. Remember to subscribe, like, and share. Go to the Post section to learn about other content I'm creating on some of my other platforms. Join me on Patreon and Substack. Be sure to click that all notification bell. Until next time, enjoy the journey.
In the dry